Long term, I still think one of the most attractive reasons for investing in the China market, it's very contrarian and very overlooked, is that income part of the story. So the state-owned enterprises, again, most of them are old economy names, so very out of favor with investors because we've seen this crowded trade. We've seen the likes of Alibaba and Tencent, which are proxies for the Chinese market for many foreign investors. But I mentioned if we do see a more rigorous pension system, again, like superannuation, think to how Australian households think about their household asset allocation. Fixed income, both global and domestic, equities, real estate, alternatives. In China at the moment, you have probably two investable areas. Property, which Xi Jinping, or President Xi Jinping has said time and time again, we do not use property for speculative uses. It's where you live. Or putting your money in a bank account. And just like the rest of the world, what you receive on your deposits is relatively small. So in order for equities to be viewed like Australian households view equities, and the income or dividend yields that are received from the blue chip companies here domestically, China has to change the way investors behave. And historically, Chinese mainland investors have been very short-term, very momentum, in, out, really not looking at the fundamentals of the companies. So if you can encourage the companies to pay higher dividend yields, increase the payout ratio, look at the income side of the equation, then this attracts domestic investors in terms of looking at equities from a long-term perspective. And ultimately, this is really, really important and potentially really profitable for foreign investors, investors sitting here in Australia, because your opportunity set increases. So you have better managed companies because of the focus on total return, not just capital appreciation.